All right, terrific. So it is 11 o'clock our time. We are on the West Coast. Hopefully, well, since this is a webinar, even if you are on the East Coast and in the middle of that crazy storm, I'm hoping you're able to at least watch this from the comfort of your home. So I want to introduce myself. My name is Linn Cook. I am from LendingQB. This is my partner, Arvin, from BeSmartee, and we are going to be talking about point-of-sale tools. We titled this "What Happens After Liftoff," obviously because of the success that Quicken Loans has had with Rocket Mortgage. So I want to give a little bit of fluff time to allow people to sign in, but again, want to introduce ourselves. Arvin, why don't you introduce yourself a little bit and give a little bit of background on how you got to where you are?
Sure. Thanks for joining the webinar, folks. My name is Arvin. I'm one of the co-founders here at BeSmartee. And my background is really in real estate and mortgage originations, going back to the early 2000s well into 2008. And then I backed away for a bit into the real estate world, doing property management and commercial and residential real estate sales. But it was in early 2014 when my other co-founders and I, Tim Nguyen, we got back together to explore an idea we had initially wireframed and thought out in 2006 and 2007 before the crash. And we started developing a point-of-sale solution, really, with all the experience that we had working in the industry, trying to create something that we would want to use ourselves. So in that time, we've been in development, and we're always developing, making it better and better each and every quarter that passes. And so that's where we are today, and that was my quick background there.
All right, thanks, Arvin. So my name is Linn Cook. I'm here at LendingQB. I've been working in the mortgage technology space for over 15 years. On the sales and marketing side, I started out on the credit reporting software side of the business. Some of you may remember me from that era. And then I moved into this LOS, automated underwriting and product and pricing engine side of the space. So, I've seen all the highs and lows, and I've certainly gotten to know a lot of the technology that has come on the scene. Being in the position that I am in terms of looking at the LOS side of things, we have a particular view at the different types of technologies that lenders are looking at. So I want to just give a very brief sort of agenda of what we're going to be talking about today. So, we're breaking this up into two parts. The first part, we're going to be having a real discussion about point-of-sale technology and the role and the importance of the role of the loan origination system. Here we're really not, Arvin and I, we're not trying to put ourselves out there as being the de facto experts on anything. Really we're participants in the market space, right? And we just want to share our observations from our unique points of views. Obviously mine coming from a vendor that provides loan origination software to lenders, and Arvin as a vendor of these point-of-sale tools. And we just want to share with you guys, especially in lenders, that we understand how important these types of tools are, and we want to kind of let you know what we've learned, working together. Then the second part of the webinar is going to be talking really a demonstration of what we're discussing, right? How specifically BeSmartee and LendingQB work together from a technology perspective. And again, this is just an example that we want to share with you guys in terms of the way that we are looking at our technology working together, and have you guys take away from this webinar whatever you would like. Okay, so let's first talk about point-of-sale technology. Okay, so there's no denying the elephant in the room is Quicken Loans, right? I mean, they have done an outstanding job with their Rocket Mortgage, both from a technology and a marketing perspective, which really is required to be successful with this type of endeavor, right? You know, obviously Rocket Mortgage, it's very cool, right? They obviously invested a lot from a you know, from a marketing perspective. I mean, you can't get any bigger than a Super Bowl commercial, obviously, right? And as such, look, the mortgage industry is absolutely in love with this concept, right? And in fact, you know, Rocket Mortgage is now kind of the term, the de facto term for these types of point of sale solutions. So they've done their job. But, you know, what we really kind of need to step back and think about is, well, you know, how much are borrowers actually in love with it? You know, there's certainly an assumption that, you know, someone that comes out that strong, well, they must be successful. And luckily, we just learned some news from Quicken Loans that actually tells us how successful they are with it, and we'll go through that in a little bit. But, you know, I think as a consequence of what Quicken Loans has done, you know, now we're seeing it. You know, certainly my clients are all coming to me and saying, hey, I want a Rocket Mortgage too, right? Because, you know, quite frankly, they're looking at this as someone that has finally solved that riddle of how do you get consumers to actually use the internet to submit a mortgage loan application and do their actual mortgage. You know, we know since the dawn of the internet that there has been an online mortgage application, right? You know, it seems like an obvious and easy choice to make to just say, hey, you know, I'm going to get a lot more loans by just putting, you know, and enabling borrowers to apply online. But, you know, as we've seen, that it doesn't always work that way. You know, the loan application process is really complicated. It's long. People don't like it. Okay, so Rocket Mortgage has somewhat crossed that chasm, right? And they've created something that's very stylish, something that's very easy to use, something that's very cool, basically. And a big part of their ability to deliver that experience to borrowers is the technology that they've baked into it. Some of the key technology that they have leveraged for Rocket Mortgage are things such as automated data verification. You know, these types of automated services that look up existing databases for employment or income or addresses, the types of things that they can pull very specific personal data into the loan application to shorten the loan application cycle, right, and make it almost a magical experience for the borrower. Because when you put in your name and social security number and maybe a phone number, and to have it come back and deliver you all this information on you is either magical or creepy. It depends on how you want to look at it, right? But the net effect is it simplifies the loan application process. Same with other technology, right? You know, you've got very good product and pricing engines. You know, that is more of a mature industry now than it was, say, 15 years ago. And there are lots of product pricing engines that are very good at delivering a fast and fairly accurate price to these borrowers. Then you've got other things that, you know, borrowers are looking for. I mean, they want to be able to submit documents. They want to be able to track their loan status and do that, you know, from their laptop or within the palm of their hand. So as a consequence, like I said, you know, now every lender wants to have their own Rocket Mortgage type of experience for their borrowers. And in response to that demand, look, there are companies like Arvin's company, BeSmartee. You know, and there's not just BeSmartee, right? There are a lot of other companies, believe me. You know, from our position as an LOS, you know, a lot of different, very dedicated point-of-sale companies have come to us and are asking and wanting to do integrations with us. But, you know, let's not forget, you know, LOS companies themselves, right, have also been developing their own point-of-sale systems. So regardless, there are a lot of choices out there for lenders, and that's a good thing and that's a bad thing, of course, right? I mean, having these options to look at different types of point-of-sale systems gives, you know, lenders a lot of flexibility. You know, what's interesting about the point-of-sale systems that we have seen that have approached us is that they all have some type of unique approach to delivering that point-of-sale experience. And you know, it's almost like they're all trying to figure out some sort of secret sauce, right? What's really going to resonate well with consumers? And again, I think that's somewhat indicative that no one really knows yet. right? Even Quicken Loans, I mean, Rocket Mortgage, there's nothing that's saying that that is the definitive method of delivering an online experience to consumers. So as a result, you know, lenders are presented with basically, you know, almost a Forrest Gump-like box of chocolate, right? You know, they all look pretty, but you never know, you know, what you're getting until you pick it, right? And that's somewhat risky, right? Because there's a significant amount of effort, you know, from a resource and a money standpoint into implementing a point-of-sale system. But how do you know whether it's going to actually work for you? And I think that's really what we want to share with you in this webinar, right? It's not that we know exactly, but maybe some ideas to help you as a lender understand what questions to ask. So to start with, you know, let's step back from this whole concept and let's just look at the consumer themselves, right? You know, let's think about, as a consumer, you know, if they're going to go online to apply for a loan or try and get a loan, you know, what do they want? What are their expectations? And let's try to align that with the capabilities of any given point-of-sale system, right? So, you know, if you look at your consumer expectations are pretty simple, right? I mean, number one, they want to know, do I even qualify for a loan, right? So to meet that consumer expectation, well, maybe what you're looking for then out of your point-of-sale system is some type of automated underwriting technology, something that can actually answer that question for that borrower, right, whether they qualify for the loan or not. Borrowers want to know, how much can I borrow and how much will it cost? Again, that maps from a capability standpoint to pricing technology, right? You know, how easy is it to apply? That, you know, can be answered in many different ways, but, you know, from what we're seeing, you know, making it easy to apply can be mapped over to data verification services, right? Shortcutting the process for the borrower. And then how quickly can it get done? Now, this is very important because getting it done isn't necessarily about getting the mortgage application done. It's about getting the loan process done. And that's where you're looking for your point of sale to be integrated with the LOS. Now, we step back and we talk about what the lender's expectations are. Well, they're pretty simple, right? Can a point of sale system generate more volume for me, right? And that kind of maps over to ease of use, marketability. And that's a little bit more difficult to define because it's pretty subjective, right? You know, whether something is easy to use, whether something is marketable. And then, can this point of sale system help me reduce my origination costs? And to us, you know, what that is actually translating into from a capability standpoint is how deeply is that point of sale system integrated with the LOS? So, you know, let's talk about that integration point, right? Because, you know, that's really the strength of our argument today is that, you know, the point of sale system is much more than just a pretty face, right? I mean, it's important, right? You want to attract borrowers to your internet site, right? But ultimately, the LOS is the brain, right? That is what's controlling the workflow, the overall process, okay? And so from what we've seen by working together, the point of sale should essentially be an absolute extension of the LOS, right? And by that, that means it's not just a matter of, well, you know, point of sale creates a loan application and shoots it into the LOS. No. You want to be able to have that point of sale and the LOS work together to really leverage these technology points. So from the standpoint of, you know, pulling a credit report or running a DU or an LP, you know, all the data verification services, you know, have the point of sale, you know, draw an initial disclosure automatically, right? You know, have it leverage e-signatures, all these different technologies. You know, the more closely that the point of sale is aligned with the LOS, the more value you're going to get out of it as a lender. But there's a lot of risk in that, okay? The more that you have the point of sale do up front, then the more important it is that the data that comes from the point of sale and goes into your LOS is absolutely airtight, right? You know, you think about, if that point of sale system is doing something, as simple as collecting loan application data, well, yeah, I mean, obviously you don't want the point of sale to misinterpret a social security number or a name or an address. That's obvious, right? But then when you talk about delivering a price, for example, to the consumer, right? What's going into that price, right? Is there closing cost fee data that is being presented to the borrower at the point of sale? If that's the case, then that closing cost fee data must absolutely be accurate when it gets transferred back into the LOS, right? Same with, your document uploads and your conditions, right? Make sure that, those two areas where documents and data are touching each other between the point of sale and the LOS are absolutely accurate, right? And the data is transferring back and forth with absolute data integrity. Because, if you're not, you can already imagine the potential compliance nightmares that you would have. For example, if you have one appraisal fee being reported on the point of sale, completely different appraisal fee being reported in the LOS system. Okay, so connecting the borrower through this data bridge is not only about connecting them to these different services, but it is also about connecting the borrower to the workflow that exists within the LOS environment. That's where you'll get or gain the benefits of efficiency that's connected from the borrower all the way through the rest of the loan process. So looking at a very simple sort of diagram of how this works, you've got your borrower entering into the process via their tablet, their phone, whatever it may be, and then from the point of sale can connect to the LOS and leverage those services, such as the AUS, the product and pricing engine, data verification service, so on and so forth. And again, it should be a nice seamless connection from the borrower directly into your document management system and into your overall workflow. Now, another sort of rearrangement of the same process is where the point of sale is actually connected to these different services. I mean, does it matter? Not really. As long as those services that the point of sale is connecting to transfers any data or document directly into the LOS, right, with absolute data integrity. So, what we're talking about is really connecting the borrower into a digital environment. That's ultimately what these point of sale systems do. And once you get the borrower into a digital environment where they're comfortable being in a digital environment, that then enables a further step of this process, whereby with the borrower in the digital environment, it's easier for you to transition them into a digital closing environment. Okay, and so you look at this, your data verification services may connect directly into a day one certainty environment. And everyone knows day one certainty means a lot. That means that you'll get rep and warrant relief from the GSEs and enable you to, speed your overall workflow because you've got that guarantee from the GSE. Another example from a doc prep environment, being able to automatically generate those initial disclosures from the point of sale and then leverage the doc prep or the LOS vendor's capabilities from an e-mortgage standpoint. E-mortgage not meaning just, e-signatures, but e-mortgage from the standpoint of generating an e-note, doing the e-closing, the e-notary, the whole kit and caboodle. And so you can close this loop between your funded loan and your actual delivery to your investor or the GSE that was initially initiated by the borrower at the front end. And that's really where a lot of the value. This is our holy grail. This is where you can conceivably think of an origination to delivery within 15 days, 10 days, 5 days, someday 1 day. But getting the borrower into this digital environment is the first step. But we have to remember that this is we're at the leading edge of this, right? You have to walk before you can run. So, when you think about the results that Quicken released last week, of their Rocket Mortgage, you're still seeing that 93% of their origination volume came from just a traditional traditional method. 7% was originated from Rocket Mortgage. In the first year, 7% to me sounds like a pretty good number, actually. Okay, we'll see how rapid the growth is as time goes by. Some of the interesting concepts or the data that came out of the Quicken study was that 80% of the users were first-time home buyers. The other stat that I found interesting personally was that more than half of the users of Rocket Mortgage were over the age of 35. And Arvin tells me 35 is it's an older millennial. It's still a millennial, I guess. But I think there may be some over assumptions that we're making about the millennial generation. And as you can see, Rocket Mortgage did claim that the Rocket Mortgage app did reduce closings by 12 days. Now, the other data that was interesting was Ellie Mae's data. Their Borrowers Insight survey also came out last week. We love Ellie Mae. They have very good stuff, very good data. Okay, and what we found interesting was that sure, almost a third of people wanted a faster process. I think that's a given. Everyone wants their mortgage process to be faster, whether it's 45 days, 20 days, 10 days, whatever. But what was really interesting is how they broke out the data from a generational perspective. As you can see here, they reported that 23% of millennials wanted more face-to-face, right? Looking at the top chart there, almost 60% of mortgage applicants did their mortgage application entirely in person. A very small percentage did entirely online, probably because there's not a lot of opportunities to do it entirely online. But this data that shows that millennials want more face-to-face, even more than Gen Xers and baby boomers, it's kind of interesting. And the other part of this is that only 9% of millennials actually wanted a shorter application, whereas 15 and 16% of Gen Xers and baby boomers wanted a shorter application. So there may be a little bit of mismatch in terms of, whether, millennials really are the ones who are demanding to do the entire mortgage on their phone, not speaking to anybody. We'll see how that data plays out. But I think it's something to be aware of. Now, moving beyond that, I think given the fact that this is still a sort of a concept within the mortgage industry that still needs to mature, I think as lenders, you would do well just to think outside of the box. Number one, loan officers are still relevant. I don't think there's any question about that. People still want to talk to someone that's knowledgeable about the process and help them with that. And that's why having a feature within your point-of-sale system that does something along the lines of like a co-browsing really can help the success of your point-of-sale system. Also providing them with easy access to assistance, whether it's via phone or some sort of chat feature. I mean, that's what consumers want. They want responsiveness. The other thing that we're seeing is that as a lender with a point-of-sale system, you would do well to survey frequently. We still don't know what is the right way, how borrowers are actually responding to these point-of-sale type systems. So surveying them and finding out what they like and what they don't like is important. But beyond that, it's also important to survey your own staff. How much does a point-of-sale system make their process better or worse? And that can inform you in terms of what you might be looking for in terms of an integration between the point-of-sale system and the LOS. And the last thing is, really be creative. The box is open. You can do whatever you want, right? And that's the interesting thing about these point-of-sale systems, that it puts the mortgage process in a form factor that can be taken anywhere. So, whether you're doing some sort of event marketing or a kiosk marketing in a mall, or in a realtor's office, even mobile marketing, make it like a food truck, right? Go to places, be where people might not expect to find a mortgage loan. And lastly, this is the internet. Remember this, right? Might does not make right, right? If you think about where we are with these point-of-sale systems, this is very similar to Facebook circa 2004. It's still emerging. The boundaries have not been set. And as the internet, traditional business rules don't apply. I mean, you look at these brands here, Bing or AOL or Blockbuster, these are all major brands that were supported with major, major money, and yet they did not find success. So, you know, as it being the internet, technology itself has really lowered the barriers for entry for even smaller or medium-sized lenders to be successful. And then innovation is important, but it is not the only thing. So the fact that you can maybe find some Silicon Valley developer who's got some great ideas is not necessarily going to determine your success. And in fact, I think we've seen a lot more failures occur with that method as opposed to having someone who actually has real relevant industry experience. We all know that the mortgage business is a very dense and a very deep industry that is not for the faint-hearted. So these are sort of the elements that we feel that are important when it comes to a point-of-sale system. So I'm going to hand this over to Arvin now, and he's actually going to go through and show you guys a little bit about what we're talking about through a demonstration of the BeSmartee system as it's integrated into LendingQB.
Yep. Thanks, Linn. So yeah, folks, we're going to highlight you know, our POS process just to give you kind of a benchmark out there, but also talk about our integration with LendingQB. You know, it's definitely no easy task to create your own POS system, but it's equally as difficult to integrate with a POS system. And you know, that's something that LendingQB and we have been doing, I would say going back to the middle of 2016. But you know, the LOS system is so robust as a system of record. There's a lot of integrations to do. So it's an ongoing thing, and once the integrations are complete, you know, there's always maintaining the integrations and making sure it works properly, because as an extension of your LOS, you know, it's really got to be as dependable as your LOS system is. So, you know, one of the things a good POS should be able to do is offer your borrowers multiple entry points to come into your system, whether that's a rate search tool like you're seeing now, or perhaps it's a direct link to an application. Maybe it's a touchscreen method via a kiosk somewhere in the developer's office. In any case, there should one of the things a POS will do is open up different avenues for a borrower to interact with you. In this instance, we'll just use a marketplace search. The borrower would go in, enter their preliminary information for a purchase loan, click search rates, and one of the benefits, and just to back up a little, so a POS really shouldn't just be a POS that you see at the supermarket where something is scanned, you pay, and then you leave. It should be a lot smarter than that, and in fact it should think and act a lot like a loan officer does. So what I mean by that is the process should be somewhat conversational with the borrower as opposed to a bunch of empty data fields that they have to complete. But it should also be adaptable and customizable to how you folks individually or with your respective companies do business with borrowers. You know, a lender in California has a different approach than a lender in Texas, than a lender in Alabama or New York, for example. So in this entry point, the borrower fills out their preliminary info, clicks on search rates, and the POS solution is hitting the product and pricing engine at this point. And that's one of the important things of the POS is being able to deliver accurate pricing and fees and programs to your borrower. Once the results come back, in this instance, you know, the borrower can filter the results, narrow it down to what they like. But once they do find something they like, well, they want to see more details. They don't just want to see the rate and program. You know, they see something that says $4,700 in fees. Well, how does that break down? Who's getting what? And what we're able to do here, this is just a screen grab of the origination charges from within a loan origination system. In this case, it's LendingQB. So that POS interaction, that integration with the POS enables a POS to go into the LOS, to pull in information directly from that POS and then display it on the borrower side. Now, of course, the lender should also be given a choice to have these fees displayed via a direct integration with the third-party vendors, such as your AMC or your title company. So, being accurate and displaying accurate fees and rates to borrowers is very important, even from the very beginning when you're setting their expectations of your company and they're beginning from this marketplace search, for example. So once the borrower likes what they see, they'll apply. They'll fill out the initial information here to create an account for themselves to log back in later. But again, data integrity, we keep going back to that, is important. So a good POS should work the data integrity methods into the process, not wait until the very end. Once the application and everything is grabbed, we spend 1 or 2 days using verification services to make sure everything is good. It should be incorporated into the process as the borrower is going through the system, and that's one of the ways you kind of prevent redundancies on the back end, which is a nightmare for a lot of your processors. So in this instance, we'll be hitting the telephone databases, for example, to let the borrower know we need a real phone number. And the integration with the LOS enables the borrower's account to be registered with the LOS, in this case LendingQB, as soon as the borrower signs up. So that capability should be there right away. The systems should be talking to each other from the very beginning, which is what we've worked so hard on over the last several months, is being able to make sure as soon as that borrower signs up through the POS, that should hit the loan origination system right away and register it as a potential customer. And then with that integration, since it's already done and we're starting from scratch, as soon as the borrower signs up, the way we've configured it with LendingQB, every 5 minutes it will push and pull information. The systems will talk to each other to see if there's any new information that needs to be pushed or pulled between the systems. So Linn mentioned the fact that it's a misconception, right? Folks still want to do business with other folks, and that's just I don't think that's ever going to go away. But with a point of sale system that's very highly automated, that's kind of hard to do. So you have to build in features to kind of humanize the process. So in this instance, for example, we've got the loan officer greeting the borrower and then letting them know who they are, their licensing info, and so forth. But we also want to make sure that they're always there, hovering over the borrower. So if the borrower needs a lifeline, they can click on the loan officer's image and get a sense for where they are in the process, for example. Maybe they want to stop here and give them a call and have a chat with them. So that human element needs to be worked into the POS. Again, it humanizes the whole experience, and that's really what borrowers want at the end of the day. So in this instance, we'll just select a single borrower applying by themselves. But it's important that a POS solution is also able to accommodate multiple borrowers. So for instance, in California, many of you know the prices are going sky high for properties, and it's becoming a common practice where unmarried co-borrowers are actually buying properties together. So with your point of sale solution, you want to be able to make sure that you can cater to those kinds of needs in your respective markets. So the borrower will provide their information here, their date of birth and social. A POS solution should also be able to accommodate to-be-determined properties. So a lot of folks are looking for conditional approvals, and in fact the trend is agents are kind of requiring it these days before they even spend time with the borrower showing them properties. So this enables the borrower to proceed with the process while the address is pending. In this instance, we'll buy a neighbor's property. We'll show the borrower the acknowledgments and authorizations we need from them. In this instance, we're they're enabling us to apply with Shoreline Mortgage, as well as being able to run their credit report as well. So here, we're just validating the address. So it's still very important. Data integrity needs to be throughout the entire process, not just in the beginning or the end. So we want to make sure that address is valid by hitting the USPS database. But one of the other concerns when a borrower is doing business online is, well, are these people who they say they are? It's really tough. So, building in out-of-wallet questions like this into the process is very important before the borrower can get too far into it. So we've worked in this instance, these out-of-wallet questions that are some things that you may have seen on the IRS website or your banking institution if you're trying to reset your password, for example. And if the borrower fails the attempt, we can lock them out, and then the loan officer has to step in and, kind of narrow down what happened here. Why was the identity not verified? And either ask the borrower to come into the office or perhaps just verify them over the phone the way that they do today. So security is important, and verifying that identity is very important early on. So one of the other elements that's important in a good point of sale solution is the ability to populate as much information into the application for the borrower as you can. We found through our own research that borrowers find they have an easier time, for lack of better words, of verifying information than they do keying in new information from scratch. So one of the reasons why we've incorporated, for example, Facebook importing, as well as non-consumer authorized data such as marketing sources, we want to house that data in the background and always use it and ping it against one another to make sure there are matches. And if there are matches, we populate the fields in the 1003, ask the borrower if this is correct or not. If there's a conflict, well, we don't want to populate that field incorrectly, so we'll leave it blank for the borrower. We do the same for LinkedIn. If the borrower chooses to import that, they'll be taken to an allowance screen here. So importing asset and income is also something important that a point of sale should do. I mean, if you think about it, it's no different than something your loan officer would ask for, so why shouldn't the point of sale system do the same? So in this instance, we'll just explore the bank statement data. So we've incorporated the ability for the borrower to import their bank statements by choosing their institution. And we've already got other institutions we've opened up. For this demo, we're just going to hone in on these 14 here. But the borrower, in the same fashion that they will be logging into their Wells Fargo account, for example, they should be able to put their credentials in, and we would be importing the bank statements up to 12 months on that borrower's behalf. Of course, they can always skip it. You want to give them options to do so, but there is an incentive for them to do this. It saves them time, for example. So in the same fashion, the income documents should be able to be imported as well, such as the payroll vendors, the tax service vendors, such as the H&R Blocks and the TurboTaxes of the world. So the point to walk away with here is providing the borrower with tools to import their income and asset documents is a important feature that a point of sale system should have. And of course, with the ability to integrate directly with the LOS system, we're able to easily push these into LendingQB's loan origination system in this instance. So if there's no other accounts to add, we'll just create the account. And now we'll take the borrower through a series of verification questions. That human element still important, not just in the beginning, but we want to make sure it's in the beginning, the middle, and the end. To let the borrower know in this instance, you're almost done. The application's been created. We just need you to verify some information. So, another thing that's important for a point of sale to be able to do is essentially be smart. So, it should be able to do thinking on behalf of the loan officer and the borrower wherever it can. So in this instance, for example, occupancy type, how will the property be occupied? So this property that's being purchased, the system has determined that this is likely going to be a primary residence. And, a point of sale solution, especially with ones that are capable of doing integrations with vendors, should be easily able to see if this new property and the old property are close to one another. Who's on title? What are the sizes of the properties? And then make a determination that this is likely going to be a primary residence. Again, this is no different than something a loan officer would do in the background, and what I myself did back in the day when we were originating. You would ask questions, and in the back of your mind, you already know the answer to any future questions. So we've built that capability in here. The borrower will then enter their monthly income. Of course, these fields can be pre-populated if the income documents are imported. Any additional income, they can add that here, such as alimony or child support. They'll review their existing expenses. They'll review their proposed expenses. And the system, a POS system, should also be smart enough to recognize if the buyer is buying a condo, well, there should be HOA dues. So if the borrower is trying to move forward without completing that field, we need to give them a reminder and make sure they're double checking this, and in fact there are fees or there are not fees. So in any case, something like a $300 missed expense could kill a deal initially. It wouldn't pass product and pricing, for example, if they're right on that cusp of that DTI. And then your loan officer has to step in. They have to uncover all of this information and then resubmit it. So, being able to make sure that data has integrity from the very beginning and the 1003 is being filled out accurately is very important. Borrower will fill out their employment information here, and they'll have a chance to review their assets and liabilities. So one of the benefits of having a direct integration with with vendors that have access to these banking institutions is being able to pull in account information, such as account number in this instance, balance, what is the checking account name. And in fact, almost all of the fields to complete a Fannie Mae 1006 form are here for you, except for the date the account was originally opened. If there's any additional assets, the borrower can add that here. But also a POS should recognize, just like a loan officer would, well, sir or ma'am, you've got these mortgages on your credit report. What's going to happen with these mortgages? So in this first instance, for example, we'll just say we're going to pay it off before closing, and then we'll enter the information of the property. And for the second mortgage, we'll just say it's not my mortgage, which will flag the loan officer on the back end to look deeper into this. So the liabilities, the borrower should be, of course, a good loan officer would call the borrower. They would review their trade lines, and to go over some things and maybe catch an account that's on the account that shouldn't be. I mean, I know I've caught plenty of those back when I was originating. So it's very important to review that credit report and the liabilities with the borrower. And this is sort of what we're doing here as well. We're displaying the liabilities. We're showing the creditor names and the account numbers, but also giving the borrower a chance to edit the balances. So perhaps they paid this down a couple days ago. It hasn't hit the credit bureaus yet. But we will flag the loan officer. So a POS should not only enable the borrower to make changes, but also alert the loan officer if certain things have changed that may or may not affect the underwriting of this file and the qualification of the file. Declarations, of course, we all have to get these, but a good POS solution will have the ability to pre-fill these on behalf of the borrower if the lender chooses. Otherwise, we can leave it blank and have the borrower select that. We want to also grab HMDA information as well, very important. So here's a critical juncture, at least in our process. The borrower's ability to verify everything, look at everything on a high level before they submit the application. So in this instance, we let the borrower see the loan summary, make any corrections, but we also want to set expectations, just like a loan officer would. So we want to show that borrower, what is your middle FICO? Where does that stand in the overall scheme of things? What is your debt to income ratio? How did we calculate it? And where does that fall, as well as the loan to value ratio? So as soon as the borrower clicks submit application, this is where an integration with an LOS and a pricing engine comes in very handy. So at this instance, what we're able to do, in this case Shoreline is using LendingQB as well as their pricing engine, Price My Loan. But what we're able to do at this juncture is we're going to send all of this information and hit the pricing engine as well as hitting the automated underwriting systems as well to come back with a conditional approval. So this is just an example of a screen grab from LendingQB and their Price My Loan PPE. We're grabbing all of that information in, and of course the lender gets to choose what is displayed back for the conditional approval. And we'll display that to the borrower with a congratulatory message where the loan officer comes back into the picture, lets the borrower know they've been conditionally approved, and here are the various loan options for you. In this instance, we pick the best approved match. It's typically a 30-year fixed. But if the borrower, for whatever reason, is not happy with their choice, well, they should be able to see what else is available for them. Not only relying on the loan officer to give them the 3 or 4 programs and thinking that's all they qualified for. So, of course, this is configurable, but if the borrower did qualify for 10 programs, well, why shouldn't we show them the 10 and then step in to have a conversation with that borrower if necessary, to drill down a bit. So, this is configurable and is totally a preference, but the ability is here. In this instance, the borrower clicked on all loan options, and they're able to see everything. But of course, this can be intimidating, and this is where we would typically take a phone call by the borrower. But in this instance, Lynn mentioned that co-browsing features are built in, which is something that's important for a POS. I mean, if you're in Texas and you have a client in Washington State, how do you have that connection with them to be able to have an educated discussion as opposed to just being over the phone? So our screen sharing capability, we find that our existing lenders are telling us it's being utilized mostly in this area here. So imagine the borrower offsets the loan officer's image. They alert the loan officer via phone call. This is the back-end portal of the loan officer. They'll log in, click on that borrower's loan, click on co-browse, and now they can see what the borrower sees in real time, and they can have an educated discussion about the various options. On the borrower side here, they have the option to allow the loan officer to continue co-browsing or stop it, and that will cut off their view. And of course, a notification should always be there letting them know if the loan officer is seeing their screen. So in this instance, we'll just pick the best approved match and move forward. Again, we're setting the expectation of the borrower, letting them know what's coming up next. They're going to review disclosures, sign them, and pay for an appraisal. And that's another important thing. A true point of sale system should be able to do everything a loan officer can do, or at least make it more efficient. So getting initial disclosures delivered and signed and appraisal payment captured is a very important part of the mortgage process. And why shouldn't that be done in the front end? So in this instance, we're integrating with the lender's document vendor and then displaying the initial disclosures here directly in the lender's experience. The borrower never had to go anywhere else to do this. And you can imagine how that co-browsing feature comes in very handy, and the loan officer has an ability to really shine here and go over these documents with the borrower. Why wait 3 or 4 days for them to get a 70-page packet in the mail and then thumb through it, get to the loan estimate, and be shocked about the thousands of dollars in costs? Well, maybe they don't understand it very well, and this is where the loan officer has a chance to put out those fires before they really start. Of course, we should also be able to capture e-signatures. So in this instance, we're integrated with the DocuSign company for this lender, and we're getting the documents e-signed. So before we move forward, it's important to bring in other parties as well. So in this instance, we're bringing in the real estate agent. The borrower puts in the real estate their agent's information, and what we're able to do is create a portal. So a POS solution should also have these functionalities as well to bring in the real estate agent. When the borrower puts their information in, the agent gets an email like this. They'll create a password. They'll go to a loan dashboard or a buyer dashboard, and now they can upload a condition, for example. And if it's tied in properly to your LOS system, like we are with LendingQB, if that condition changes later and we need an inspection form, we can update that automatically in the real estate agent portal without the loan officer having to make extra phone calls and waste extra time. We'll also show the agent the loan summary, ability to upload documents. We'll show them a conditional approval letter for future offers, as well as where the borrower is in the process, which would cut down significantly on phone calls to your loan officers about where's my buyer in the process. So, getting an appraisal payment and taking that borrower off the street is very important, getting them committed, so to speak. So a POS solution should also have the ability to either collect credit card information to pass it to your AMC company, or be able to charge the amount outright and pass you or the AMC company the funds. In this instance, the borrower will authorize the payment and pay for the appraisal. And now they'll arrive at their loan dashboard, which is really where they'll live for the remainder of the loan process. And they can message with their loan officer back and forth here. They could view a list of their conditions, which this is a screen grab from LendingQB's LOS. You know, this is where that integration also comes in useful. We can go in there, we can capture the conditions for this particular borrower, because the systems have been talking to each other this whole time, and then display those conditions on the borrower's dashboard and get them to working on it. For instance, the account that we've already imported by way of the Wells Fargo automated importing, the account, the document will look something like this. And we're also able to push this into the LOS. So that integration is important. We can push documents into the loan origination system as well. In this instance, this is that same document in LendingQB, as well as the audit trail for the DocuSign documents. So again, the borrower will live here, satisfying their conditions. Any new conditions that are brought up later in the process, they will simply appear for the borrower here. I'll just click to simulate the underwriter has cleared the conditions, and this is when the borrower would give the notary their signing preferences, and the POS company should be able to push this to your signing vendor and deliver that message to them. A couple, another tool here. Once a closing disclosure is ready, the lenders should be able to access the POS portal from the back end and upload any future documents they need e-signed, such as a closing disclosure. So they'll upload that when it's ready, put that on the borrower's dashboard, the borrower clicks on it and signs it just like they did the initial disclosures. And that's really it for the borrower process. Lynn, I guess I'll hand it back to you.
Yeah, thanks, Arvin. So again, I think what's really relevant is that these integration points between the point of sale system and the LOS are critical, right? This is not just a bolt-on to your LOS. There has to be a real integration, a real deep integration, in order for it to be very effective and be of value to you as a lender and to your borrower. If there's any sort of duplication of process, that kind of defeats the purpose. So things such as, being able to have, for example, our system automatically generate a set of conditions and then pass those conditions straight over into the point of sale system to be displayed out to the consumer, and then, as you saw, have the ability for the consumer to not only upload their documents, but have those documents that are uploaded on those conditions drop directly into the LOS for the processor and underwriter to immediately edit. And so these are the types of things that are to be of consideration by you as a lender. I mean, again, we're not saying that you have to use BeSmartee and LendingQB, by no means. But what we are saying is that these are considerations you should be making as you're evaluating these point-of-sale systems and discussing with your LOS vendor, what capabilities are they going to enable with these point-of-sale systems. And again, it's absolutely true that an LOS vendor could develop their own point-of-sale system themselves, right? There's nothing wrong with that. But in today's environment, where integrations and partnerships are so prevalent, that it does make sense to enable your LOS vendor to focus on what they do best, right? Which is the LOS, and then have these partnerships, have these integrations to dedicated, focused companies that focus on that single element, such as a point-of-sale system. And then by combining the two, you've got really the best of both worlds, which, I guess goes back into the whole best-of-breed argument that I've been talking about over the past several months. So in any case, that's what we have for you guys today. I mean, we really appreciate that you guys have joined us for our webinar. We will be sending out a survey. Give us about an hour or so. We're going to send out a survey to you guys, and any of you guys that want to respond to it, please feel free to do. But I will be giving out Starbucks gift cards to the first 4 people that respond to our survey. Hat tip to Scott Mortensen from QuestSoft for giving me this idea. I really love it. Okay. And then, the recording, like I said, of this webinar will be posted online. We'll send out an email to all the attendees for where it can be downloaded or viewed. And then you can see that we have our contact information here. Please, by any means, if any of you guys have any questions or want to learn more about either of our systems, feel free to reach out to us directly. And as you can see, we will be attending the MBA Technology Conference. We will actually be doing live demonstrations of the integration between BeSmartee and LendingQB. So we certainly invite you guys to come and visit us at the MBA Technology Conference in Chicago. And we will also, actually, the day after the MBA Tech Conference, we will be at the ABA Real Estate Lending Conference in Orlando. So those are just a couple of places where you can actually meet and greet with us in person. So we do have a few questions. I think these are pretty specific questions to the integration that we have, because I know I have a lot of my clients on here, but I think what's interesting is a lot of these questions do concern the conditioning, right? I think that is a key point of the process where a lot of efficiency can be gained. Now, in our specific context, the ways that conditions are generated, number one, it highlights the integration between the point of sale and a pricing engine, right? So within the BeSmartee and LendingQB context, BeSmartee is actually hitting our pricing engine, right? So, LendingQB, for those of you that don't know, we have our own automated underwriting and loan pricing engine. And so BeSmartee leverages our already baked in technology, not only to generate the eligibility and the price, but to generate rules-based conditions. And so within our pricing engine, we can configure our pricing engine to display, a bunch of conditions, but we can specify which conditions get passed back into BeSmartee to be displayed out to the consumer. Okay. Another question that I see here regards e-signing. And again, this highlights how integrations work, right? In the case of the BeSmartee and LendingQB interface, now LendingQB, we don't have our own e-signature technology. We rely on our document vendor partners that are integrated to us to provide that e-signing technology. In the case of BeSmartee, they also have their own e-signing technology that they're integrated with. So there's a lot of flexibility. So whether that e-signing technology is being delivered by the LOS vendor, by the document vendor, or the point-of-sale vendor, again, the whole idea is making sure that there is data integrity with that e-sign document. As in, yes, the e-signature has been captured. Now we're going to deliver that document with the captured e-signature directly into the LOS for further reference, archiving, packaging, whatever it may be. Okay. So in any case, I think there are a couple of other questions we will get into, and actually I will probably respond to a lot of these guys directly because they are most of my clients. But in any case, thank you guys so much. We really appreciate the time that you spent with us today. We will be sending out the survey. We'll be sending out the link to this webinar recording online. And any other questions, please feel free to either email Arvin or myself at the email address that we're showing here.
Yeah, thank you, Lynn, and thank you everyone for being on this call and spending an hour of your day with us to learn a little bit more about what we have to say. And any additional questions, reach out to us. We're happy to answer them back.
All right, thank you guys. Have a great day.